What's going on, good people? It's your boy James Harris, founder of a movement called Men to Heal, which focuses on men's overall wellness, their mental health, physical health, and of course, their emotional health. And I'm also the author of a book called Man Just Express Yourself, which is an interactive planner guide for boys and men to better express themselves. I definitely appreciate all my fellows who went out and got this book as a tool. Congratulations on taking the next step and working on certain issues and things that you want to learn insight about. Salute to my fellow clinicians who got this book and doing interventions or just got it in your lobby as a conversation starter. I definitely appreciate you. And of course, salute to those spouses out there who doing these interventions with their partner over dinner or date night or just having these engaging conversations. I definitely appreciate it. And praises to those parents who got this book for their young sons. You guys are making a difference. I definitely appreciate that. I like to see the feedback that you're leaving reviews or sending me personal messages or emails. I definitely appreciate it. And if you want a copy of the book, make sure you go to Barnes& and Nobles, Amazon, Target, Walmart, pretty much anywhere books are sold. I definitely appreciate you. On my website also is my board game. Yes, I created a board game called Cheesy Dates, which is pretty much for all type of relationships, whether that's your platonic relationships or your intimate relationships. You can have this at your girls' night, your boys' nights, or adult game nights, and especially, of course, couples' nights. That board game comes with two card decks. One is a date card deck with multiple different date ideas, and then the other card deck is those tough conversations that you need to have within your relationship. Get you thinking, help you increase communication, and of course, there's some pawn pieces that assist you with moving around the board. I definitely appreciate it. So www.mentoheal.com. And if you're new here, make sure you like, share, subscribe. And if you've been here for a while, definitely appreciate you. We're monetized now. And so, since you've been here, or if you're new here, you know that I interview different guests. And the guest that I got coming up now is.
What's going on, man? My name is Quentin. I run Strategy Financial Collective. I'm an independent insurance broker. So I network with roughly right now about 50 or so different insurance carriers to find the best fit for people in this situation.
Nice. So two things for certain, man. People are going to be born, which is a perfect time to get them insurance. And unfortunately, people are going to die, which is a perfect time if you need insurance. So if you could just break down the different type of insurances. I know some employers offer it, but in addition to that, I think you should still have your own policy. So can you break all that down for us?
Yeah, most certainly. I mean, of course, you can get coverage through your employer. It's usually an employee-owned type policy. You're usually restricted. It's good for some people in their situations, but for most people, the average person, it's good to have insurance outside of your employer because you own it. It's portable. You can take it with you wherever you decide to go. But you got multiple different facets to that. Depending on your health and different things like that, certain policies are going to be better for you and you can have better rates and things like that. But through your employer, it's fixed. It's just standard. So if you're healthy, you're paying a standard rate. If you're not healthy, you're paying a standard rate. So you got to look at that and see which one works for you. But then also, too, the average person switches their career, more than 7 times in their lifetime. So every time you start that, you're going to have to start all over again. I mean, it's not portable. You can't take it with you. So you want to capitalize on your age and your health and stuff today. And you want to lock that in and carry that for the rest of your life. But in a simple aspect of insurance, you've got temporary coverage and you got permanent coverage. You got certain types of temporary coverage, then you got certain types of permanent coverage. Most people look at term insurance and then they look at whole life insurance. But whole life is not the only type of permanent life insurance policies. There's different other types of permanent life insurance policies out there. You have universal life policies, you have universal life based policies. Essentially, you got variable universal life. You have another type called guaranteed universal life, which is almost kind of like a permanent term insurance policy. You can pick what age you want that policy to expire at.
Yeah. So, and that's the main thing. I think a lot of people, when you hear insurance, the most misconceptions that I've heard thus far is, oh, I got insurance through my job. and I heard people debating on whether to get term or whole insurance. So if you could, I know you just did a brief synopsis of the difference between the two, but what is the main differences between whole and term policy, depending on, of course, your age, your health risk factors, and different things like that?
Well, term is essentially what it sounds like. It's renewable. So just hypothetically, you can get a term policy, an annual renewable term, which is essentially what it sounds like. Every single year, the policy is going to automatically renew at a higher rate. It's the least expensive term coverage out there for a short period of time. A lot of people get those, mostly like businesses and things like that. They might get it for just a brief period of time just to secure a loan or something with the bank versus getting like a 10-year term or a 20-year term or what have you. But you have term policies too that go all the way up to 40 years. Most people think the term, the longest you get is 30 years, but actually there's companies out there that offer 40-year terms. As people are living longer, you may even see eventually one day 45 and 50-year terms. But for the longest period of time, 30 years used to be the longest, but now 40 years. You also have whole life insurance. Whole life insurance usually is some sort of cash building or some type of benefit attached to it. So essentially, it's a term policy that has some sort of an investment piece to it as well that grows. Some people like the benefits of it. Some people don't like the benefits of it. But depending on your situation, there's something out there for you that can be built to be custom for your situation. But for the average consumer, usually you want to have mostly term, and then you also want to have some sort of a permanent something locked in if you don't already have an asset that you can liquidate in the future to take care of your business and stuff like that in the future.
Yeah. So overall, though, financial literacy is definitely important, but I know a lot of people lack that information. So when we're speaking about generational wealth, one of the ways to establish generational wealth is, of course, having life insurance. Because now you see a lot of people with the GoFundMe's or just collecting other donations, or not being able to bury the family, just taking it however they can give, whether that's cremation or we're just going to debt doing it. But so what do you think? Do you think it's important for people to establish this type of wealth early on, and on pretty much everybody in your family if you can afford it?
Well, it all is affordable. There's different lots of strategies to be able to afford it. Like I said, a lot of people don't take the time to research those because we don't hear about it in our community. A lot of the policies and stuff that we see that's marketed to people that look like you and I and stuff that comes in the mail and stuff like that, some of those aren't the most efficient and cost-friendly options for us. And people know that. We're spending too much for some of these, and they're smaller type policies. But I do believe that it's something that we should look at and establish. The earlier, the better. In a perfect world, you want to do it before the age of 18 because you bypass a lot of the stuff that might be a barrier to entry for a lot of people that look like us, like the criminal history and your driving record and credit and all that stuff. They don't check none of that when you're a minor. So if you lock all that stuff in, have it set now, when you're 50, 60, 70, or whatever, it doesn't matter. You already got it locked in and the price is still the same. And they can't change that.
So if it is a father out there or a mother or a parent or a son, like for me personally, I have a policy on my mother. She's not in the best health, and I know one day, it's bound to happen because some things are just inedible. So I was under the impression, like, let me just do this one, so it wouldn't be a stressful situation for my siblings in addition to myself when that time comes. And she has so many different health issues just throughout my adolescence, my youth, all the way up until now. So what about like a parent? Like if I or anybody out there listening want a policy on that child, do you recommend that and then transferring it to the child, or which policy you feel would be better? if I want a policy, I'm just speaking in general, like you take care of all my
I
stuff.
got
So
you.
yeah, so my stuff is already taken care of, but I'm speaking as a listener just so the other listeners can understand the different concepts. So like if I have a daughter who is 2 years old, is it wise for me to get a policy on her now and transfer it over to her when she turns 18, or just have that policy on her for that term or whole life? Which is the best strategy for that parent that's listening that probably just had a kid or is about to have a kid?
Well, most insurance carriers, they want a loud term on kids. Usually it's not available for kids until the age of 15. So most kids, they have to have some sort of a permanent policy. But you want to get it at an early enough age, but also too, you want to purchase a type of policy that allows that child to add on to it in the future and to grow with it. What most parents end up doing is that, they might secure like a $25,000 or $50,000 whole life policy. And just the design of the policy is going to grow slowly over the life of that person, but they're going to become an adult one day. They're going to buy a house and all this other stuff. So they might end up needing multiples of that in the future. And they have to go back through medical underwriting again in the future. And depending on their situation, they may get approved for it, or they may have to pay more for it, and it may get declined or whatever. You just don't know. But what you want to do is when you want to insure the child, and you don't necessarily have to give it to the child at a certain age. Some insurance carriers, they'll make it so that, once the owner of the policy deceases, then they become the owner. Or you can have it set up through an estate or something like that, that the child never owns the policy. I mean, there's so many different ways. You got to kind of look at your child. Do you think they're mature enough to handle the situation? Okay, you know what, at 18, I'm going to let you take control of it. But could you imagine at 18, 19, 20, your parent giving you an insurance policy and you looking at it and there's $50,000 of cash in there? They might say, oh, I'm going to go blow this money or whatever, end up lapsing the policy. So you got to kind of gauge each situation and kind of determine, hey, you know what, am I going to hold on to this thing and it's going to do what it's going to do regardless and still pay out if something happens, or I'm going to give them control, because whoever controls the money has access to be able to change the beneficiary, and they also have access to the cash benefit inside the policy.
And I recently just lost my sister, and it was a question of like if she had insurance. Like nobody knew. Her children didn't know. Other people within the family didn't know. So it was one of those questions like, yo, how do we find this information? So for the people out there listening, like, how do you know if a parent or a loved one, a spouse, partner have insurance? Like, what's the policy? Like if they expire today on, just an untimely situation or death that occur, like how do the family members or anybody know, like, oh yeah, they had insurance, without saying, it's somebody always got that drawer with all the papers in it, like without going through that drawer with all the papers in it, or a safe in the house. Like, how do people know, like, if my loved one had an insurance policy or not?
There's actually a website you can go to. I don't know it off the top of my hand, but you can Google search it. It's like a national, I think it's the NAIC or something like that. And it's like the insurance policy lookup. But essentially the easiest thing to do is to reach out to your state's insurance commission office. And sometimes they might have record of that, but you can go to, it's a website and you can plug in their information. Then also too, another resource is the unclaimed assets website. Each state has one. Sometimes you can see assets being left behind, and sometimes it'll be from like old insurance policies and stuff like that as well, that's been designated to you already. Because a lot of money is lost like that. A lot of people don't change their beneficiaries and stuff like that. And people got money sitting and they just have no idea that it's sitting there.
Yeah. So I appreciate that answer. And hopefully somebody can, obtain information from that and probably do the search or look up what they have to look up. And by the time I drop this video, though, I'll do my research or hit you back and get the accurate website to post in the links below, so people can, identify that information, the correct information. So let's talk about spouses, man. Because in the movies or in Hollywood or whatever, you hear about like I remember this episode in Martin when he thought Gina was trying to kill him for the insurance money. Remember the mom the mom overheard them talking or whatever. So what about things like that? Like, do you think those rumors are real? Do you think spouses should have a joint policy or individual policy? Or what do you think is the best practice when it comes to spouses? I mean, I'm a firm believer of do what's best for you in your house situation, but like, what do you think the best practice is? Like, what's the most beneficial to the family, you know?
Well, I'm a proponent of having your own. It's really not a major discount to have a joint, but then divorce rates is so high and just people are just so spiteful. I mean, I've got clients all the time reaching out to me who, they had a family policy and they got a divorce, and the spouse, they canceled the policy, but, they're 50, 60 some odd years old now, and their health has failed or whatever, and they may not be able to afford a policy now or get as much as they had before because their better policy that they had years ago is now canceled.
Okay. So is it any truth to the fact of if I have a separate policy and my partner, goes out and do something to me and I didn't have an opportunity to change the beneficiary or whatever, like, is there any truth to that? Like, they'll still have access to everything that you leave behind, or if you didn't change the beneficiary, if it didn't work out?
Well, the insurance company, their only obligation is to the policy owner. So if the policy owner never changed the beneficiary, they're going to assume that, hey, the policy owner wanted this beneficiary to have these assets. So it's up to you as the policy owner to make sure that your beneficiaries are current. Then also, too, when you do your policy, they're going to ask you up front, who do you want to be your primary beneficiary? Who do you want to be your contingent in case that primary had deceased? And some companies even have, a third option or a fourth option. But a lot of people, a lot of times, they just put a primary and say, hey, I'll think about it and change it or whatever, or people get divorced or, different things, or people even deceased. There's a lot of money being paid to people who have passed away. The insurance company holds it for benefit of that deceased individual, and they keep it in an account, and it's constantly being earned in interest and stuff for the insurance company until that person gets the money, and they're not coming back from the dead. So it's just another stream of revenue for the insurance company.
Yeah, so I think that was a major question, man, because I know somebody who sadly, that like the two spouses were each other's beneficiary, but they passed together in an accident. You know what I'm saying? Like, and I guess it was so unfortunate. Like, I think what happened, since they passed and they was each other beneficiary, they didn't have a second person or whatever. So I think at that point they had to go by the will, and then the estate left and all that stuff. But those are just untimely situations and issues that people can encounter. So I just wanted to make sure that people had that information that they can go back to, or at least do their own research on. Any other takeaways that you want to mention as far as insurance, or any tips for the people when they are searching for insurances?
Well, the main thing is that, you got to deal with somebody who knows your situation. Then also, too, when you're searching for insurance, you want to be truthful to that insurance company, that agent, that rep, whoever. Because a lot of policies that don't pay out is because they go back and they check the application. You might have been a lifelong drinker and you said on the application that you don't drink. So now they just found a loophole for a reason to decline that $300,000 that your kids is going to get. All because, you had insurance for a while. The insurance company, they didn't miss out because you made those premiums for years, so that's revenue. And now, you defaulted on the application. But find somebody who puts you with a company that works best for your situation, because every single insurance carrier out there has a specific profile of a certain type of person that they're looking for, and they offer good rates to specific types of, illnesses or criminal histories or driving records or what have you. Just don't, take the shotgun approach and just say, hey, I'm going to go try with this person, this person, this person, this person, because if you get too many declines, they can stop you from getting certain types of insurance policies for a certain number of years before you're even eligible for certain type of insurance policies. So you really want to get the right policy on the first try. A worst case scenario, that second try. And you just don't want to shop around with a bunch of different people and have them running all your stuff like that, because what it does is that it sends up a red flag to the insurance company. Hey, this person is scrambling trying to get insurance, so it must be something wrong with this person. So either we're going to charge them, an arm and a leg because they really desperate for insurance, or we're going to restrict what we're going to pay out for. If this person dies this certain type of way, we're not going to pay out. So you really want to deal with somebody who knows what they're doing. And that's where people like myself come into play. I'm an insurance broker. I don't work for just one insurance company. I listen to your situation and I try to place you with the best company.
Okay. So a rumor, which I don't know if it's true or not, but maybe you do. Does death by suicide cancel your insurance policy?
With most insurance carriers, they have a 2-year contestability period. So if you commit suicide in the first 2 years, it's going to be an automatic decline. But then after that, a lot of your larger insurance companies, it could be 2 years and 1 day and you take your life and they'll pay that policy.
Okay. Because in the movies and you see this couple, one, died by suicide just so the other person wouldn't, cancel out the insurance or whatever the case is. So I just had to mention that. So, all right, just to clarify, if a person have a kid, they should immediately get insurance on their kid, some type of policy, and just let it be. And then eventually that kid will take it over and be able to add to it.
Well, you want to add that rider. You want to add a feature to the policy because not all policies allow for that. Most people would just get a generic whole life policy or what have you. But you want to add, it's typically called a policy purchase option, or some companies call it guaranteed insurability rider. And so hypothetically, you can get like a $50,000 whole life policy and then it'll have like a $50,000 policy purchase option on it. Every couple years, the insurance company will reach out to that individual, the owner of the policy, and say, hey, you got this policy purchase option on here that you can add up to an additional $50,000. Do you want to add it? That year, that person might say, no, we're going to pass. But that person still has $50,000 worth of coverage. 4 years go by. They reach back out to you again. Hey, do you want to add up to an additional 50,000? Yeah, I want to do that. You know what? I just want to add 25,000 now. So they'll add 25,000 to the policy. Now that person has $75,000 worth of policy, worth of insurance. They'll do that every couple of years up until they get to the age of 40 with most companies. So they can just keep adding to the policy, keep adding to the policy.
All right. So for my people out there in a relationship, you found the perfect person. Y'all gonna get married right off in the sunset. When should they start to have that conversation about life insurance, having a policy together, including the kids or whatever the case is?
I mean, I think it's something that you want to talk about, early on, especially when you start talking about finances and stuff like that. Learning about finances, is something that a lot of relationships, they don't touch upon in the early stages because, you're attracted to what you see. We're very visual people, and that's the first thing that kind of catches our eye. But you want to talk about that longevity, though.
Yeah. So when you do get in this relationship, you guys get married and you decide, all right, cool. I have an insurance policy. You have an insurance policy. Now let's figure out if we need to up the coverage. Let's figure out how we need to make these disbursements and all those things. Is that something that you can do too? Is that an additional rider, or is that in that policy and get a new policy type thing?
Usually, it might make more sense to just keep what you already have and just add addition to. A lot of people don't realize it, but usually you save money by having multiple life insurance policies. What a lot of people try to do is that they try to kind of forecast. Well, let me get this ginormous insurance policy now, and this will cover everything. But you might be overspending some years and things because you don't need all that coverage. So like hypothetically, if you just bought a home, generally it's a 30-year mortgage. So you might get a 30-year term life insurance policy just to cover that house. So if the house is $250, you get a 30-year, $250,000 term policy. Life happens, you have a child. Okay, you know what? I need to get 10 to 15 times my income and just in case something happens to me, to make sure that my child can go to school, whatever like that. So now I might get, a 20-year term policy for $500,000. 20 years because, you know, my child is 1 year old and I want to make sure that if something happened to him before he turns 21, that this policy pays out, because at 21, you know, you're not grown and gone, but you know, you're not defenseless. You can get out and work and you'll be okay. You might not be perfect, but you'll be okay. And just layering your different policies and stuff like that and doing that approach versus getting a 30-year term for 2 million or whatever like that.
So if I know these answers, but I want, you know, in case somebody else don't know the answers, I want people to, you know, get the minimum person. I want them to get as much insight as they can. So if I'm 20 years old and I get a 20-year term policy now, which will put me at 40 years. So I'm 42 now. What happened to that policy that I got at 20 years old? It's 22 years ago. So I got the same policy? Do I just add a rider, or did they pay me out and say start over? What are the options? How did that happen?
Well, I mean, you got to look at your situation, but you know, your term policies, they're going to auto renew. So a 20-year term, that 21st year is going to automatically renew at a higher rate. And every single year going forward, it's going to get more and more expensive until eventually it's going to lapse because you can't afford it anymore. So you probably want to look at your situation where you are at that point in time and say, hey, does this make sense? Do I keep this for a certain period of time? Your term policy is going to have some sort of conversion privilege that you can take some of that coverage and convert it into permanent so you don't have to worry about losing it. Or do I just let this thing go and start making payments on it and get a whole brand new term? You know, everybody's situation is different. You got to look at your health and criminal and all of that. Because, you know, I've got some clients who, you know, I had one guy who had a stroke at an early age, and it made more sense for him to just convert that term policy that he had previously and bite that bullet and convert it all to permanent, because he wouldn't be able to really afford to get a new term policy because of his health condition.
So for the people out there, there are policies out there, though, that say, hey, you've been paying for 20 years. You know, we're going to send you a check, but you got to get a new policy. There are those type of policies as well, right?
Yeah, those are called return or premium. Very seldom do they make sense, though, because when you look at the math, you know, they held your money for 30 years and they paid you exactly what you paid into the policy. You know, if you took that difference from, you know, a 30-year term policy versus a 30-year term policy with a return or premium, if you took that difference and just invested it in the market, you're probably going to get double or triple the money what they paid you back. And also, too, you're going to surpass inflation because they don't factor in inflation and stuff as well.
Yeah. So, but I think with those type of policies, people view it as technically it's automatic savings. You know what I'm saying? And
Right.
for the people who don't want to invest traditionally, and another thing too, like I got multiple properties, and like at closing, probably within the next, can you hear me? My bad. At closing, within like the next 10 to 15 days, you get the paper from the mortgage company saying, hey, you want life insurance on your house if something happened, blah, blah, blah. What do you advise people to do on those situations?
You got to look at your situation right then and there and see what kind of makes sense for you. But a lot of those mortgage protection policies and things like that, a lot of times those are bank owned or lender owned. And you and I both know from owning properties, those notes get held by different companies multiple times throughout the life of that. You know, so if it's with one company and another company comes and buys that note from you, you might end up losing that coverage. You know, I know people that it's happened to. So it might make more sense that you own your own insurance policy again, because it's portable and you own it. So regardless of who holds that note, you still have that protection.
Yeah. I definitely appreciate it. I don't think I have any more questions, and I think there's a lot of information for people to grasp, and I think they will do that. But I also don't want to give them too much, because I want them to, one, reach out to you and or do their own research, because life insurance is definitely something that people need, man. I've seen several GoFundMe's within the past couple of weeks, which is unfortunate, you know, and I know for sure multiple companies here that bury people, man. The minimum coverage I've seen with 3 different companies is for cremation was $6,000. $6,000 to just let me burn. You know what I'm saying?
Right.
Which is wild to me, because personally, to be honest with you, I want to be cremated. I don't want to, like, I wouldn't want my family to pay all this money just to put me in the ground, like, you know. But I was just thinking, like, yo, 6,000, like that's ridiculous, you know.
Right.
So, but yeah, so hopefully people got enough information, man, that they can do their own research or just reach out to you directly. So if you would just drop all your information, the best information for people to get in contact with you if they have questions.
Yeah, my phone number, as you see right here, 804-301-1632. That's my direct line. That's my cell phone number. And that's the best thing. You know, I offer, multiple types of life insurance. I do disability insurance, long-term care insurance, hospital indemnity policies. We use insurance strategies for businesses, things like key man insurance, buy-sell agreements, things like that. It really is all about legacy, protecting your own and just passing it on.
So I got people in multiple states that view my channel or connect with me through social media. Do you only service Virginia, or they can be anywhere in the country?
I mean, I can network with other areas, but I mean, as far as license, I'm licensed in Virginia, Maryland, North Carolina, South Carolina, DC, Texas, and Georgia. So most of the areas around us here in Virginia.
Yeah, no, that's cool, man. So I definitely appreciate you. I'll catch you on the next one. I definitely thank you again for taking the time out to discuss this critical topic. And again, man, hopefully people got some information. We'll definitely be in contact. I'll put all your information at the bottom just in case people have direct questions for you. So I appreciate you for coming out.
Hey, I appreciate you, and I appreciate your platform, man. Keep educating people, man. It's what it's all about.
You know it.